Welcome to PM Express Business Edition. The commercial banks have released their financials for 2022. Well, some have said that looking at how they fared for last year, do they need another round of support to help them stay alive for 2023? And some will talk about GATS, a vehicle established by government to help some local banks doing the banking sector cleanup who were hit by some challenges. How relevant is GAT today, looking at the current challenges facing the commercial banks with respect to how their results came out for 2023? Well, I have with me here the Chief Executive of the Ghana Amalgamated Trust, that special vehicle that was set up to help these banks at that time. Is that vehicle still strong and doing well? And can it carry the load if it's given extra load with respect to these commercial banks? Mr. thank you so much for your time, and I appreciate it so much. How are you doing? It's been quite a while.
It's been a while.
How are you doing yourself?
I'm doing well. Doing well. Thank you.
GATS, interesting. A lot of things were said about you when it was first established those times. Let me ask you, how is GATS doing right now as we speak as an institution? Have you closed shop and gone home to sleep because you were set up as a special vehicle and now your work is done?
Not at all. So let me take you back to the genesis of GATS. 2017, you may recall, we had two local banks that collapsed. And within that same year, there was the requirement to increase the minimum capital upon which banks in Ghana operated. And as banks were trying to recapitalize by the deadline, which was December 31st of 2018, we had other issues come up that shook the banking sector in Ghana, because in the middle of 2018, we had additional indigenous banks that failed. Within that environment, it became clear that our local banks were struggling to recapitalize to the new minimum capital that was required. This wasn't an issue faced by some of the banks that were supported by foreign investors. And so some of these local banks reached out to government to seek assistance. Otherwise, there was the real risk that our local participation in banking in Ghana was going to be decimated. So the president listened and formed a committee that had stakeholder representation from different groups. And they thought through different options in terms of solutions to support the local banks. And then came the idea of GATS through that process. So the proposal to government was to set up this special purpose vehicle, or SPV, and use it specifically to recapitalize some of the local banks that needed the help. But beyond that, GATS had a second mandate, which is to then help these local banks to improve in the areas of governance, management capabilities and capacity, improve in financial performance overall, so that with improved profitable growth, they will become more competitive within the banking landscape. So in December 2018, GATS was formed as a company, incorporated here in Ghana. And then the GATS board was put together, constituted shortly thereafter. And we've started operations for the past 4 to 5 years now. We've done a lot of work to support the banks that were involved. And so we've been very busy.
Very busy. It means you've not closed up shop and gone to sleep because your initial mandate has been addressed. Help me out with some understanding here. So there were 4 local banks, or was it 5 that you actually stepped in to help? I'm right. That is what is it constantly.
So we had 5 banks that were
so just run through those banks as well. Yeah.
So 5 banks were selected for the GATS program. So you had ADB, which is the Greek Development Bank. You have Prudential Bank. You have Omni Basic. Used to be Omni Bank that merged with Basic. So Omni Basic. and then we had UMB as one of them, and then NIB. So these were the 5 banks that initially were selected for the GATT program. So when the GATT board was fully constituted in January of 2019, the mandate given us was then to first recapitalize these banks, and then secondly, to support their business transformation, just like I had described earlier on. And since then, that's what we've been doing. The first part of our mandate, which was the recapitalization, we completed recapitalizing 4 of the banks within 12 months of our operations. So by late 2019, early 2020, we had recapitalized the 4 banks.
Help me understand, educate, was CBG part of the banks that you stepped into?
No, it wasn't. So CBG was not part of the...
So help me, in terms of these 5 banks, did you actually inject fresh capital, or was those technical financial engineering about swapping some equity, bonds, and government papers? Did you actually inject fresh capital into these banks?
Yes. So we raised funds and
From
we
where?
recapitalized. So let me take you back again to 2019. When we initially started our program, we had looked at various options around the world, and originally thought it would be great if we could raise funds from the private sector and use those funds as fresh capital to support the banks under the program. So that's what we started out to do. We started engaging both corporate and retail investors to try and raise funds. It started taking long. So we then started thinking about different options to be able to do this. And then we realized that it would be faster if we got some bridge support from the government of Ghana to be able to then recapitalize the bank. So by the middle part of 2019, we engaged the Ministry of Finance and then had discussions, and we got that support from government with fresh capital that enabled us to recapitalize the first 4 banks under the program.
And how much was this capital that you got from government?
So government gave us 800 million cedis to be able to recapitalize the first 4 banks.
So in total, how much capital then did you got this amount of money from government, you got from other sources as well. How much did you invest in these 5 banks in terms of the total funding that you put in?
Yeah, so the 800 million was earmarked really for the 4 banks. And we got it at that time only from government. Because like I indicated earlier, it was taking long when we tried to raise it from private sources. So we worked with government as part of the government intervention program to then support the banks directly.
Help me out in terms of the spread and the distribution and the investment, because depending on how much each bank needed, that would have, the investment is dependent on the request, or after your own assessment, how much does Bank A need? How much does Bank D need? I, as a bank, ADB or George Wiafe, might come to you that I need about maybe 700 million Ghana cedis or something. Based on your assessment, maybe the bank doesn't actually need that amount of money. Give me a breakdown in terms of how these funds were spread across these banks in terms of the direct capital injection.
Okay. So we worked closely with Bank of Ghana in order to do that, because the regulator is the one that works with the institutions to determine capital needs. So Bank of Ghana provided us those estimates. So on a bank-by-bank basis, Bank of Ghana gave us how much was required for each bank to then meet the capital requirements. And then on our part, we then had to structure commercial investment arrangements for each bank individually. So that is where, even though we had the estimate from Bank of Ghana per bank, we also then conducted our own analysis and our own due diligence to understand the situations for each of the banks. And then based on that, we came up with our own transformation programs and the blueprints for the GATT program. And this was all structured based on the private equity model. Because like I said earlier on, GATT was proposed as the solution to be able to do this. And we had to adopt a particular model that we thought would be most effective in addressing the issues at the local banks we went to support. So the private equity model was chosen. And I like that model because it was just based on some of the best practice that we had seen around the world. A good example is what had been done in Singapore. So Singapore in the early 70s, around 1974, set up a government-sponsored private equity company called Temasek. And Temasek's goal was to support initially certain institutions in the country. They started off small, but today they are one of the best in terms of sovereign-sponsored private equity companies. They've supported companies in Singapore itself. They've done that very successfully and have gone beyond now to even invest in other countries, but still owned by the people of Singapore. So that was the approach, the model that we adopted for GATS. So government is the sole owner of GATS as we speak. We have ordinary shares that are 100% owned by the government of Ghana. So really, in effect, it's the ordinary Ghanaian citizen that owns GATS as an entity.
Let's look at how much, and I'm asking these questions because of the concerns and the fear that this was just a tool for government to virtually take over these banks. So these monies that you invested, let's look at ADB. How much did you pump into ADB? Let's look at UMB. How much did you also invest in UMB as well?
Okay.
And these other banks here, in terms of the actual cash.
Okay, so you've asked a two-part question.
Yeah.
And
let's start first with the capital.
So that's the second. That's the second part of your question. So, Bank of Ghana, again, in working with them, had done all the analysis and provided us the estimate. So, for Prudential Bank, as an example, the estimate was about 250 million. Similar for UMB. And then for ADB and Omnibusec, these were in the hundreds, so about 130 million cedis. And then, of course, we had some transaction costs and some funding required to run the GATS office itself. So all of that came up to the 800 million. But to your point, each bank got the funding required by the regulator in order to be fully recapitalized so they could continue their operations.
These monies, was it done in the form of a credit or is going to be converted into an equity?
Okay. So these were all structured, again, using the private equity model as equity investments into the banks. So for each bank, and that's why I indicated, we operated on the private equity model, but analyzed the situation for each bank on a standalone basis, because each company, each bank is a little different. And we worked with a team. It wasn't just the GATS board or the GATS secretariat, but worked with a team of advisors in order to do this. So a lot of the financial and tax analysis and due diligence was conducted by PwC for all the banks that we were looking at back then. And so they came up with insights into the financial health and helped us to then do our valuations and analysis that helped us then to structure the equity investments into each specific bank on a bank-by-bank basis. And these were all on commercial terms, because the funds we gave to support the banks were expected to be recouped later on with hopefully a return, so that we can then return it to the original source of funds, which today is.
And what years were you looking at? So, for instance, these funds, were you looking at maybe 2 years, 3 years, 4 years, or 5 years, or 10 years?
So we're looking at generally 5 years.
Okay.
And 5 years in itself, we realized was very aggressive, because if you look at private equity and even some of the developed countries, it usually could run sometimes 5 to 7 years. In Africa, generally, a lot of these funds tend to run even longer. So sometimes some funds in Africa would run for 10 years, sometimes up to even 12 years. So when we started, we realized that the original mandate given GATS to be able to do some of these things within 5 years was aggressive, but we're willing to put in the hard work. We're up to the task, so we structured the investments appropriately very early on. And since then, the goal has been to work with the banks to improve and create value so that at the right time we could exit out of those banks. And that actually leads me to the earlier question that you raised about misconceptions out there about the intent of GATS or the mandate of GATS. But let me actually take us one step out to the global level, that government intervention within specific sections of the economy, or particularly within banking, is actually very common. So you may recall the US itself went through this in 2008. So 2008, early in the year, we had one US bank, Bear Stearns, that collapsed. And then a couple of months later on, in around September of 2008, we had Lehman Brothers, which was one of the premier investment banks in the US, also collapsed. Then it became very clear to the US government that there was going to be a contagion effect that may possibly bring the banking system of the US to its knees. And US, being capitalists of a country as it is, decided, this is not something that the free markets could correct on their own, that a government intervention was required. And so the US set out a program called the Troubled Asset Relief Program, TAP, and started first with the banking sector where banks were recapitalized, went beyond the banking sector to other sections of the financial services, including insurance. AIG was supported, all of that. Beyond that, went into manufacturing. If you recall, even the auto manufacturers, Chrysler, GM, all of those companies were supported with funding. So it's a model that we had seen successfully implemented in other jurisdictions, and so we decided, with the challenges facing the banking sector in Ghana, let's adopt a similar model to operate. So you lay out on top of that some of these interventions that we had seen successfully done, and then best practice from other countries like Singapore, and that led to the formation of GATS. We, the board, are an independent group of professionals.
But you were appointed by government, of course.
Appointed by government, because this is a government policy, a government mandate.
When you started the independence things, but sorry, you can go ahead. That's just
well, I say independent because we are professionals, and so a lot of the work that we do, yes, we get a policy guidance from government because government has a mandate, and that is why GATT was formed. But we operate on commercial basis, freely. Let me put it that way. So in all our analysis and the negotiations we had with the banks in order to determine, the equity stakes we will take for the funding we're providing the banks to recapitalize them, all those were done on an independent basis by GATS, with the GATS board leading with the support of advisors.
I want to come back. So it means that these funding that was extended to these banks was a purely commercial debt thing, and is not going to be converted into equity to take stakes in these banks. No.
So it's actually, just to clarify, what we funded the banks with is actually not debt at all. It was equity.
Okay.
So we negotiated with each bank. So let's take ADB, for instance. ADB is publicly listed and traded. ADB needed an amount estimated by Bank of Ghana, about 127 million cedis, to be fully recapitalized in 2019. So we engaged ADB. We had discussions with the board, with management. ADB had advisors advising them. We had advisors advise. So everything was done on a commercial arm's length basis. And we invested equity into ADB. So for our investment into ADB, we negotiated an 11.3% equity stake in ADB.
Is this different from what you extended to them to help them recapitalize? Or for instance, out of the 200 million Ghana cedis that we gave to ADB, a fraction of that amount to be converted to equity?
No, so for ADB, as an example,
just that clarity on that one.
The entire amount we put in was put in as equity. But to clarify further, it was put in as ordinary equity. You know, equity can come in various forms.
But that is interesting, because some will say that was the whole reason behind this whole GATT instrument thing the government put out there. Another avenue to get back into these banks and hold controlling stake in these banks.
So not controlling stakes at all. So again, let's start with ADB. And using that example, we invested, we got 11.3%. That's a relatively small stake.
In relation to what X amount of money that you invested in the bank?
No, so for the entire amount, the 127 million we invested to recapitalize ADB to then meet the minimum capital required, that entire amount went into common equity. And it's traded on the stock exchange today. So at the time when we are ready to exit, we just sell those equity stakes, hopefully back to the original shareholders, and then return the funds back to its source, which in this case is government.
I'll be coming back to get some more clarity and how we break this down, because there are some who say that because of what happened in the past, there is a GATT 2 that might be needed now in connection to the Ghana Financial Stability Fund. And what do you make of it? And with respect to with all these trouble that these banks are going through now, what would be the role of GATT in terms of assisting them to stabilize? And whether really, to get the clarity from the CEO, whether this was a small screen approach or strategy by government to virtually take over these local banks and even spread some of the banks with foreign interests. This is PM Express Business Edition. Be right back after this break. Welcome back to PM Express Business Edition, as we look at the banking sector challenges, post-domestic debt exchange program, and what role can GATT play in all these things. But we can talk about the role of GATT in the future of banking sector challenges, but not look at what they've also done previously in terms of their role in assisting those 5 local banks, and whether some have argued that the current challenges that have hit the banks for last year, that still makes a strong case for another GATT 2. And so too would help us to appreciate whether that is relevant or not. But we're getting some understanding about the injection of capital in these 5 local banks and what that warranted, to whether it was taking over these banks, and explaining to me ordinary shares and all those things. Let's break it down. So if I get the right as a layman, you invested in ADB, it commanded 11 point something stake in the bank.
Yes.
Government is now owning this X amount of stake in the bank, in addition to whatever interest it had already.
Yes.
Some are saying out there that, listen, this whole special purpose vehicle, special purpose Maybach or maybe Touareg or whatever, was just a ploy to take over these banks.
Again, not at all. So let me clarify further. ADB is actually, for me, a very simple example, because it's publicly listed and traded. Its information is public, and it already, like you indicated, had some forms of government ownership, because Ministry of Finance had a stake. But GATT, Bank of Ghana too has a stake, but GATT is a separate entity. So like I'm saying, we operated independently. We engaged ADB and as a counterparty, as a target investment in this case, negotiated everything. And in exchange for the funds we put into ADB to recapitalize them to the right level, we got an 11.3% ordinary equity stake. Now let's come to the others. So Prudential is the other bank that we supported. So similarly, we engaged the key stakeholders of Prudential Bank as a private bank or a private company. We negotiated after we had done our due diligence that covered finance, tax, legal areas, all of that. And we negotiated a particular stake in exchange for, again, the funds that we put into the bank. At that time, we structured all our investment as equity, but in this case, at ordinary shares or ordinary equity into Prudential Bank. But again, we never took a controlling stake. Okay. Then let's talk about Omnibisec. Basic, when we did our analysis and our due diligence, again, that gave us an indication of valuation of the company. We then went through rigorous negotiations with the original shareholders, the board, the management. They also had the advisors, legal, financial advisors. At the end of the day, what structure worked for them was, again, total equity funding investment into the bank to meet the minimum capital required. However, in this case, we split our equity into two forms. So the majority of that, which is about 80 to 90%, went into ordinary shares. That gave us about 44, 45% ordinary equity stake in the bank. And then we put some additional money, so about 10 million cedis or so back then, into convertible preference shares, which were also equity, but didn't give us the common equity rights or common equity voting rights, but they were convertible, which was an important feature of the investment, because we said that by the time we were exiting, we could convert to get the full economic and financial value so that we could return the funds back to the original source and the original investors. But it was structured that way so we wouldn't go above a certain level of ownership. Again, intentionally structured so we did not get control of any bank. So the original shareholders still had control of Basic, of ADB, and actually for all the other banks.
You talked about best practice elsewhere, and I stand to be educated on that one. Why wasn't these funds extended to them on a commercial credit basis? Lend it to them, let them make their money, in 5 years' time they pay back. Why was it then, at a point in time, thought that let's convert this investment into equity in these banks?
Good. So actually that's what private equity does. Sometimes private equity could blend equity with some other forms of funding. Sometimes they may have debt-like features.
Yeah.
In our case, though, we had to make sure that we met the regulatory requirements. The regulatory requirements were that the funding to those banks be equity and not debt.
That came from Bank of Ghana?
That is based on...
Why that requirement?
Oh, no, that's
best practice.
That's generally best practice. And the recapitalization for most of the other banks were done that way. So we also injected equity because it provides room and freedom for the banks to operate without having to bear, high interest finance charges initially.
And knowing where you're coming from, is that the best practice?
Oh, yes, I think so. Because, again, when you invest equity, you go in as a partner. Versus when you lend, you're not necessarily a partner. You have a financial stake and you have a negotiation to get a financial reward. The equity and ownership issues are not your problem when you are just a lender. But in our case, remember, the goal was twofold in terms of our mandate. So first, recapitalize. And then secondly, which for me I think is even a more important part of our mandate, was to then help with the transformation program so that we are supporting banks to improve in governance, improve in their strategic implementation, their market operations, management, and ultimately they become just financially viable and more competitive. So we have a vibrant local and indigenous stake within our banking sector.
Help me out with respect to this approach that you adopted in terms of the investment. So do they still have that 5-year plan to pay back this? Because now it's an equity now. How is it being worked out? Help me with some education here.
So all these were negotiated initially at the time we funded the banks. So it's equity, and we are looking at 3 main options of exit. The first option is to give the equity back to the original shareholders. So in all our investment agreements, we've pre-negotiated the prices for our exits. The terms are all already pre-negotiated. And the original shareholders then have the 5 years to figure out how to come up with the funds.
And that is this year, if I stand to be correct.
Well, so we started, most of them getting to the end of 2019. So this year through next year is when the 5-year window
So let's say end of 2024.
So by around next year, Of course, there's some flexibility because our goal and hope is to support them and not necessarily enforce things that.
So let's take a bank like Prudential Bank. Maybe middle of July, we've been able to. We have enough money on our books. We want to renegotiate or push you out and have a controlling stake. GATS, are you going to accept their offer on the table? That listen, we think that we've raised enough. We've been able to help ourselves. We put the structures in place. We want to buy you out. Are you going to accept that offer?
Absolutely. So, actually, the beauty of it is this is already in our agreement. So, in our agreement, the original shareholders have the right to actually just say, here is the money we negotiated in 2019. Take the money, the funds you brought us, plus whatever return we've negotiated, and give us back the equity, the shares you own. And then it's done. They have 100%.
And the payment will come with the necessary interest and all the rest.
All of that has been pre-negotiated. And they agreed, the banks had agreed, because they realized, this were good deals.
They didn't have a gun pointed to their head in trying to get this because they needed money badly.
Absolutely not. And that's why I keep saying, these were independently done by GATS, but with commercial structures and arm's length. So we had our advisors. They had their advisors. For all the companies, they had financial advisors, legal advisors, people advising them on accounting, all matters. And these negotiations is the reason why the negotiations took several months. And at different levels. We engaged shareholders, engaged board members, engaged management, engaged the advisors to make sure that everything was done properly. But again, the principles for us were, number one, even though we went in to support these banks, to not take a controlling stake in any of them. And so even in instances where the valuation and the negotiation gave us the right to actually get controlling stakes in the banks, we decided not to. So we split the equity into ordinary shares that would give us the voting rights along with the economic rights. And then we put the rest into preference shares. And done specifically that way so we didn't have control.
One of the reasons or the structure of GATT or what you intended to do was also to improve on the governance structure of these local banks. I mean, not to mention names, but again, there are several rumors that play in the public space. There are some of these banks that are still struggling when it comes to corporate governance. Do you think that your work was done well?
I think we've seen major improvements in that area. And I can
major
tell
improvement, but some of these banks are still facing some corporate governance issues.
Again, for me, it's comparing the situation today versus where we started. And it's a journey. So I agree there could be opportunities to do better, to improve. But when I look back to 2019, where we're coming from, or even when you go to 2017, when a lot of the changes were coming into the banking sector to improve, I think a lot of improvements have come through. So with the GATT banks, for instance, as we sit today, I think when I look across the boards, because remember, because we're using again the private equity model, in exchange for our investments, we negotiated board seats. So we had directors on the boards representing or nominated by GATT. And so we made sure that we brought in people with the requisite expertise, diversity in terms of backgrounds, gender balance, all of that, to strengthen the boards. And the boards today, I think, are doing much better. And again, that's what we would hope, that there's an improvement in the governance, along with the improvement in management capabilities and strategies of the banks and all of that. And ultimately, for me, this shows up in the improved financial results that were published by the banks.
It's interesting that you've spoken about financial results, but you also, again, mentioned improved. I mean, as of now, 5 years after GATT, we should be looking at more of a fairly stabilized GATT banks than talking about improvement. Some would still, again, and sorry to take you back, that we'll put question mark about the work of GATT.
Okay, so let's look at the numbers. I go back to 2019. Let's start with a bank like ADB. So in 2019, ADB's profits published were just under 15 million cedis. And fast forward to 2021, And the reason I'm forwarding to 2021, we'll pack 2022, we can come back to later, because 2022, of course, had a factor, an unusual factor of a debt restructuring. But let's see what happened before that debt restructuring. ADB's profits improved from 15 million to about 82 million cedis as of 2021
now due
when
to
they published. Well, I think we had some contributions to make there for that improvement, because again, it was part of our mandate. But again, let's not limit it to ADB. So let's look at the other banks. Prudential Bank is another one. We invested in Prudential Bank in 2019. In that year, they published profits of about 24 million cedis. Again, fast forward to 2021, where their profits had now more than trebled to about 84 million cedis. And again, there I think we had supported the bank and contributed to that. Not only us, of course, there are other shareholders, other stakeholders who also played a role. But I think GAT is a contributing factor to that. Let's look at, in the case of Prudential, where for about 8 years, shareholders had not received a dividend. And last year, for the first time in 8 years, the bank was able to pay a dividend, which for me, I think is a major milestone and a testament to some of the support we had given the bank to improve, ultimately, financially. Look at Omni Basic as another example. When you look at the combined financials of Omni and Basic, they were making losses going back several years. As of September 2022 last year, they were actually on track to make profits last year until the debt restructuring. So again, you move from making losses for several years to almost becoming profitable before the restructuring. UMB, similarly, we've seen improvements in their financials. So for me, that ultimately is the test for the success of GAT, that yes, we go in and do a lot of hard work to improve governance. You support shareholders and the board to improve management capabilities and all of that. You ensure that the functions are improved. You know, credit function is enhanced, risk management is better. We have better investment into IT and all of that. But ultimately, it should lead to profitable growth of these banks, because that is what would make them more viable and more competitive within the landscape. And that I'm happy and very proud to say we've been able to do that very well.
You spoke about the domestic debt exchange program and what happened in 2002 and all the rest. And some have argued or said that based on what happened last year, it appears GATT might have to expand the scope, or another GATT 2 is needed. What do you tell to those who are started making this argument? Because the banks, the bank association would, we're okay, I mean, just profits went down, Q1 is good. But there might be some element of fresh capital injection again for some of these banks, especially the local banks. I mean, we understand that the Bank of Ghana has looked at an optional window where if you have to recapitalize, you need fresh capital because of this. You may have to look at that option and quickly do that, maybe 2025 or something.
Yeah, there's a forbearance.
Yeah. What do you make of this current push out there that GATT, you might be needed again, because it appears that some local banks might take a hit, even though we've seen that K1 is coming up quite strongly in terms of fresh injection of capital. They might need it.
Yeah. So, look, George, I'm happy to hear that for some who have been following the work of GATT.
For some, not all.
Well, you have a diversity of opinions, and that's what makes our democracy good, right? We can't all think the same way. But I think some candidly will tell you GATT has done really well in its initial mandate. And I mean, I'm happy of the work we've done there. And like I indicated, we have the capabilities to be able to support further. The good thing is, our sponsor, which is the Ministry of Finance, had actually been in discussions with GATT to see if we could actually take the capabilities and expertise we have in the success of GATT 1, or the first phase of GATT, to actually roll this into other sectors of the economy and to make GATT more permanent. So, again,
is that something that is on the table to make GATT a more permanent institution?
It was in the budget statement that the Minister of Finance presented to Parliament in 2021 November for the 2022 budget, where there was the indication that there's thinking and frameworks coming up to turn GATT into a permanent entity to support banking. So, looking at areas of the economy like fintech, manufacturing industry, where GATT could play a more vital role in supporting our private sector to grow, to become the real engine that can help the economy to move even forward. And I think we have the expertise and the capabilities to be able to do that. So for now, it's a question of government policy, because, we work based on government policy. So I know that there are a lot of discussions going on. Frameworks are being developed. We've provided input to our sponsor, which is the Ministry of Finance. And at the right time, everything would come together and would understand the role that we are going to play in all of this. But we stand ready.
Some of you spoke about the Ghana Financial Stability Fund. And I know the minister, when I had an engagement with him in Washington, D.C., he was looking at somewhere end of July, World Bank has come on board, African Development Bank has come on board. There were even talks that maybe let's look at GATT coming in to play some role in how the disbursement or the support is done when it comes to the Ghana Financial Stability Fund. What do you again make of these proposals out there, or these engagement or talks out there that maybe GATT should come on board to help with the structuring and the support in terms of solvency and investment, liquidity support for these banks and financial institutions when it comes to the Ghana Financial Stability Fund? Yeah,
so look, I think the Ghana Stability Fund, Financial Sector Stability Fund, is a great idea. And again, I think it's a good thing that GATT be considered for, because we have the expertise. We've done it for 4 to 5 years now. And if our help is needed to be able to support again, we are happy to do that.
Has government been engaged? Has government been talking to you behind the scenes?
Oh, we've provided inputs because, frameworks have to be developed. Initial proposals have to be put together and all of that. And so because of the work that we've done previously, we've provided whatever inputs we need to provide to the Ministry of Finance.
Some have said that this challenge has come up again, and I'll be delving more into getting your independent thoughts in terms of these banks. That yes, some have argued about debt exchange program, and it's a fact. Some of these banks were heavily exposed, but some 4, 3, 5 banks, despite their limited exposure, posted some strong results. Some have said that, do you think the time has come for all these commercial banks to take a second look at their whole lending, credit operations? Because, listen, whether they like it or not, government bonds will be there. It will be very juicy. What will be your total investment and credit approach to ensure that you minimize the shock? Some banks made 100 million, over 100 million profits and all the rest. What is your personal take, moving away from GATT as a person, about how the banks fared last year? They will all throw up their arms in the air about the exchange program. And some will say, knowing where you're coming from, but some will say, listen, whatever way you look at it, it's quite a difficult one for these banks. What should be the approach going forward as a personal person?
So, George, last year was a difficult year, particularly because of some of the issues that you've touched upon. But I also think out of the challenges could come opportunities. Like you started hinting on, I think this is a good opportunity for banks to take a step back and see how they can come up with new strategies, market strategies, to diversify their income streams. So yes, government investments may probably continue to be a part of what they do, but how then do you look at other areas where you can get more income, trading income, come up with maybe new products and services for which banks can then generate income? I think this hopefully would be even good for customers, with the consumers of banking services. Because if banks are able to leverage on a lot that is happening in the IT space, and fintech in particular, and we've seen some of that with improvements in mobile banking, digital banking, and the rest. This is the opportunity for banks to innovate around their product offerings think through ways that maybe they can become more efficient in their operations, more effective in what they do. You brought up the issue of credit lending. How can we come up with good models to be able to give good quality loans and credit? Because those are actually needed to support the private sector in particular, so that the private sector can grow, and as private sector grows, create more jobs and opportunities and be able to help the economy to move forward, because we can't always rely on government to do everything. Government must play its role, absolutely. But hopefully private sector can play an increasingly important role in moving the economic development forward.
I know you were excited about people pushing for, making certain statement that supports the relevance of GATS. But you also want to get to the era where a GATT is not needed as well, and also has to look at the future of banking as well with all these things that has happened. This is PM Express Business Edition as we look at the challenges facing the banking sector post-domestic debt exchange program and what will be the role of GATS, and also doing a critical assessment of their work over the past 4 years and how that could help these banks going forward. We'll be back after this break. Welcome back to PM Express Business Edition as we engage the Chief Executive of the Ghana Amalgamated Trust. And you look at the banking sector, their role that they played, and looking at the challenges that is facing commercial banks now based on the domestic debt exchange program and the hits that most of the commercial banks took, and what will be the role of GATT going forward with respect to these commercial banks. So, Mr. Otu, I get from you that, listen, yes, GATT is available to help and all the rest, but can we also move to an era where a GATT is not needed, because then you have to come in and play a role of fresh capital injection, support these banks on governance and all those things. And some will say we still see it being picked up one way or the other in terms of the governance issues, the financial structure, and how these banks model their operations.
Look, George, my view on this is it would be very important for Ghana to develop an ecosystem and an end-to-end value chain for financing and funding, all the way from ideation through startup to nascent companies to very mature companies. And private equity plays a key role in that. I think because the concept of private equity, venture capital, and all of that is still very nascent in Ghana, government probably has to continue to play a role for a while to help develop that segment. And GATT, for me, I think, is a very creative, innovative model for this kind of private equity that I'm talking about that may help the industry to develop. And at some point, a decision could be taken. But when I look at the examples from other countries, again, Temasek has been in operation since 1974 and continues to play that role because it's found valuable for the Singaporean government. And I think GATT could actually do that. So, I mean, for the next foreseeable future, I would rather encourage that GATT should support the creation. So, if you're a young person out of some ideas that you have, want to create a company, how then do we ensure that the ecosystem allows you to get angel investors to start putting your idea into reality? You get to a level where you're a startup, you get venture capital to support you. Then later on, you move on to private equity, like GATT, supporting you all the way through, then maybe listing on the stock exchange or something, and then ultimately getting bank financing. Today, we don't have that. And so anyone who has ideas has to run to the bank. And the bank doesn't provide the sort of patient capital in the form of equity and the support and all that comes with it to do that. And we have to break that, otherwise our development
if you look
is
back
at risk.
today, looking at this engagement, and you look back, these 5 commercial banks, and pushing against the wall, do you think that if it hadn't been GATT, these banks wouldn't have been there, or there could be a contagion effect?
Absolutely. So look at the benefits of GATT from the very beginning. The fact that government came up with a policy and with GATT, the 5 banks were saved and were sheltered. And that contagion negative effects was stopped. Directly, we saved about 5,400 jobs. And indirectly, we estimate another 12 to 20,000 jobs that were saved alone through the 5 GATT banks. We also had depositors funds of about 10 billion at that time. That was no longer put at risk, but that was still salvaged. And since then, the deposits have actually more than doubled. The good thing is, a lot of that actually translated also into loans. So over the time we've been working with the GATT banks, their deposits have grown over an average of 20% every year. But the loans they've given out on average have actually grown more than 30% every year. And guess where those loans are going to? They're going to the SMEs, the small, medium-sized enterprises, usually local companies that hire a lot of our own people to support private sector growth. So absolutely, I think GATT as an intervention policy by government has been key in preventing that negative effect on the economy.
Well, some will say the verdict is out there. When I know the debate will go on in your homes and offices about the impact that this special purpose vehicle, or maybe let's say a Maybach, has had on these commercial banks in Ghana today, and where the current development still raises questions about the operations and what they've done or they've not done. This is PM Express Business Edition. So look at the commercial bank challenges facing these commercial banks in Ghana and the role of GATT and whether a GATT 2 is needed or not. Mr. Tu, thank you so much for your time.
Thank you.
I appreciate so much. And I know we'll come back again looking at what is happening in the commercial banks in space. Well, let's continue talking. Let's debate. And let's see whether time will be the best judge in terms of what they've done and what these commercial banks are also doing right now in the country. Have a great day. This has been PM Express Business Edition. My name is George Wiafe.